welcome back. Well, the burning topic right now in the market is the IT sector. Should you buy the fall or should you stay away? Is there more pain left? Is Q2 going to be worse than Q1? All of those questions will get answered. We have with us Vibhor Singhal from Nuvama, as well as Sumit Jain joining us from ICICI Securities to talk to us about the sector and the outlook going forward. Gentlemen, hi, thank you so much for making time and speaking with us. Vibhor, just wanted to begin by asking you, what are you recommending clients right now? Buy the fall?
Yeah, very much. So we are recommending clients to buy the fall. I think the positive that we draw from the Infosys results yesterday, and in fact all the results that have come till now, is a very strong deal flow, right from TCS to Infosys to Wipro to LTIM and to Emphasis late night yesterday. Almost all companies have reported super strong deal flow. That is just a testimony to the fact that there is a very strong demand environment out there. And it's only a matter of time that this demand gets converted into revenue. There is an ambiguity regarding as to when this entire demand is going to get converted into revenue, and that is leading to the ambiguity regarding how much revenue is going to fall into the FY24 bucket and how much is going to spill over into FY25 bucket. But if you're a long-only investor, I think this is the perfect time to buy the stocks. They're correcting on apprehensions, reasonable apprehensions, I would say. But the strong demand ensures that you will have strong growth, top line and earnings growth coming into the sector. And this is just the time to buy the stock to benefit out of that.
Sumit, do you echo that sentiment? And if yes, what is your preference, your pecking order of preference?
Yeah, I think I slightly differ from that point that, the very strong order book will reflect in the revenue growth in the near to medium term. The reason being, if you look at the commentary of all the companies, there is a clear shift in terms of order book from discretionary smaller size projects to large size cost optimization programs. And typically these programs have 5 to 10 year duration, and the impact of this order book on revenue growth is going to be slightly slow and weak. So till the time we don't see the discretionary spend coming back to these companies, you may not see the large cap companies like TCS, Infosys going back to a double digit growth. What is already penciled in for FY25 by the street. So I guess there could be a bit of a risk to those numbers pending the macro recovery. And I think rather than buying the entire sector, we will be stock specific companies where the order book has been strong. They are guiding for better growth in the second half of this financial year. So we are positive on TCS and HCL in that regard, given that HCL growth in the next 9 months is going to be strong, given they have not cut their guidance for the full year despite a weak growth in June quarter. And also in case of TCS, they are very strong in cost optimization programs historically, if you look at, and this is the year they can actually accelerate the market share gain versus the large global peers in the rest of the world. So we are positive on these two names in the large cap. He recently downgraded Infosys to hold. Reason being, there could be certain company specific challenges here for Infosys, which may not be there for the entire sector. And this is where the re-rating of Infosys could be difficult in the near to medium term. And I think in terms of company specific challenges, it could be senior management attrition, it could be certain client specific issues, and also the fact that Infosys has a slightly higher exposure towards discretionary revenues compared to TCS. And I don't know whether investors looked at it, but Infosys has stopped reporting their digital revenues from this quarter onwards. And a lot of projects in digital are discretionary in nature. And on the mid-cap side, we are positive on Persistent, although they had a weak order book this quarter, but the management was clearly out there and saying that the deals are a bit lumpy and their order book momentum continues to remain strong.
Sure. The point taken, Vipul, that was my question to you as well. For Infosys, what do you think that specific problem is? And the entire thesis of the premium between TCS and Infosys narrowing, do you think that negates now and there'll be a reason why Infosys will continue to trade at a bit of a discount?
Yeah, I think on that front I completely agree with Sumit. In fact, we also downloaded Infosys yesterday. So I think Infosys is having a combination of I would say sector-wide as well as company-specific challenges. I think I would break their company guidance cut into 3 parts. One is, of course, I think they're seeing those project cancellation and delays, which I think everybody is seeing in the industry as well. The second would be the management attrition challenges, and because of that, maybe some project cancellations or project renewals did not happening. Maybe that is leading to the kind of revenue fall. And then lastly, maybe some sort of let's say, I mean, I dare to say that maybe a bit of an aggression into the earlier guidance and a bit of conservatism built into the current guidance. So I think all these three things put together led to the sharp cut in guidance that Infosys had yesterday. In the near term, I think I would also echo the fact that there are very few re-rating triggers for the stock. I think the stock might remain sideways for a long time, but we have to admit, I mean, it's a company with a supreme fundamentals and very high quality. They've delivered for years after years. I think it's just a culmination of multiple things coming together at some point of at a point of time that is leading to the kind of the guidance that they have given out. But I'm quite confident the company is going to come out of it with flying colors in a matter of time as soon as the ambiguity goes out. But for the near to medium term, we do believe that there are very few re-rating triggers for the stock, and the valuation premium that TCS enjoys over Infosys might stay for a little longer than people would have liked, the Infosys investors would have liked.
Look at some of the stocks which are doing so well, even this kind of environment. Look at the Emphasis commentary coming in. In fact, there is clear distinction between the investor community willingness also. It seemed to have gone up between the mid-cap end of the basket. What are your top stocks in the mid-cap side where challenges doesn't seem to be so pronounced right now, persistent and thereabout downwards?
Absolutely. I think our thesis for the entire sector is also that these quality tier 2 companies, we don't call them mid-cap because they are kind of in that mid-tier range. So these quality tier 2 companies like let's say LTI, Mindtree, Coforge, Persistent, Emphasis, these are no longer the mid-cap companies of the yesteryears, which had a very concentrated revenue profile and a very high level of client concentration. These are very well diversified companies, more than $1 billion size in each of these companies, and they're doing phenomenally well. So I think we believe these companies are going to continue to outgrow and outperform the large cap peers. So LTI Mindtree is our topic across the board. It's of course a semi-classified large cap at this point of time. In the mid cap space, Coforge remains our topic, and so does Persistent.
Sure, let me toss that similar question to you, Sumit, as well. Within the mid-cap and small-cap category, because suddenly there are names like Sonata Software and Birla Soft and Neogen Software and whatnot, Zensatec, etc., which is coming a lot on investor radar, and they're looking like good investable ideas. Do you have any of these names in your coverage or any mid-cap and smaller-cap name that you want to recommend?
Yeah, sure. I think we are also quite positive on Persistent particularly, given that the management has delivered consistently for last several quarters, and even in the current environment, which is quite challenging, they have been able to deliver a 3% QOQ growth, which they have committed in the past. So I guess we are positive on that name. LTI Mindtree also we cover, but we have a hold rating given valuations are a bit stretched out, given a lot of inflows this stock has seen on account of inclusion in Nifty. We cover Newgen as well. We recently initiated on the name 3-4 days back, but the stock has now run up quite a lot, and there is a limited upside now left to our target price. So we will not recommend to have a strong buy on that name anymore. And other than that, we are covering Emphasis as well, where again we have a hold rating given that there is a limited visibility of the mortgage business reviving back in the near to medium term. So yeah, we cover these 4-5 mid-cap stocks out of which we are positive and Persistent.
Okay, gentlemen, we'll let you go on that note. Thank you so much for making time speaking with us. I'm sure it's going to be a busy day with a lot of client conversations going on with the entire IT sector in focus, so really appreciate your time. But apart from IT, a whole host of other sectors are in focus as well. In fact, case in point,